Okay, with me this morning is someone you might expect to be optimistic. His firm, Lightyear Capital, may find it easier to invest in banks and insurers thanks to looser rules at the FDIC. But he has concerns about how fast deals can get done, the role of the Fed, and also, of course, the economy. We're not out of the woods yet. Don Marron is the former CEO of Paine Webber and now founder, chairman, and CEO of Lightyear Capital. And Don, great to see you as always. It's good to have you back. And in fact, very timely. You were here with me a year ago when all of this was going on with Lehman and AIG. But first, I want to tackle that news that I just talked about, Bank of America being up by Dick Beauvais. And I was talking about that with the guys, Adam and John. Should we at this point be judging banks by whether or not they pull out of government programs or stay in government programs? It's too early to tell right now.
Well, I think it's too early to tell, but it is great that you say a year ago we didn't think we'd be talking this way.
Yeah.
So it's terrific if they want to give the money back. I think the key here is the government gave them money to save them. It was essentially low-cost money, capital, the balance sheet. Now the question is the income statement. Can these banks make money under relatively normal circumstances?
Well, I mean, but I think the sentiment is they can earn the money, but can they earn as much as they did, right?
Right, exactly. And how will they earn it? Will they take less risk? Yes, they will, but does that mean they'll also be earning less? This is a key statement, though, to the whole system. We put the money in when you needed it. Now maybe it's going to come out. You'll be back on your own as an operating business. And what's great about this from a stock market point of view, the shift has gone from survival in assessing these companies to how they're going to do in the future. That's exactly what you want.
Don, has all the bad behavior begun to be rooted out? Let's say the leverage ratios at 30 and above. All of that bad behavior, is that being cleansed out now?
Well, I think it's become more aware to everybody what's happened, but the key issue is illiquidity. What happened in the whole system is we went to an illiquid state. Banks owned things that they couldn't sell. They essentially lost the right to be changing their mind. Leverage works fine on, say, government bonds, where you can change your mind and sell them overnight. Leverage is a much more complicated thing when you have to keep it long term, and then you go through a crisis.
Right, you have to hold on to it, yes,
Yeah.
and then exactly. Okay, Don, hang on. We'll be back with you to talk more about the financial crisis and about recovery. Well, I'm back with Don Marron. He's the founder, chairman, and CEO of Lightyear Capital. And Don, we're taking a look back and now taking a look forward at where we are from this crisis, which we've been saying all along is quite scary. We don't know where we're going to be 12 months from now. What is your view? I mean, are we on a strong path to recovery, or is there a pretty good chance that we're going to fall back into recession?
Well, the first thing is the economy has been saved, as it were. All this money has been poured into the economy by the government, and now the markets are saying that things are getting better, and Ben Bernanke is saying they're getting better, so they must be getting better. The question is how fast and how long, and nobody knows that. But the basic issue is the government took action and it worked, and that's just a sigh of relief for markets all over the world. Also, there's a lot of liquidity. There's $3.7 trillion in money market funds earning virtually nothing. So investors everywhere have also missed these markets, some of them. So they're waiting and watching. So you'd have to say it's a liquid market now, at least in stocks.
Yeah.
People are growingly optimistic, but the idea of a double dip isn't impossible. We have to wait a few more months.
And if we had a double dip?
Well, it depends how strong it is. My own view is that that's not an unlikely scenario, but that basically the underpinnings of the economy have regained some strength, and we're probably okay going forward in here. Big issues in the administration now that impact the economy, probably the health care bill is the biggest, but separate from that, the whole issue about how you keep interest rates low and what do you do about unemployment.
Don, I mean, your job really is to evaluate and look at the various banks, or the banks in the sector, both in the large cap and also the mid and small caps. And I'm just wondering, from your point of view, do you see more visibility there?
Yeah, you do now. The basic issue in dealing with mid-sized banks, and we've met with the managers of almost 150 of them in the last year and a half, is the whole question, first of all, is how strong are they now? What's their portfolio like? And the second thing is, what's their earning power going forward? Now, understanding their portfolio now is a little easier than it was before. There is a little more visibility, there's a little more openness. You can make somewhat better projections. In terms of going forward, part of the issue is how strong the economy is going to be. Most of these mid-sized banks lend to small business and on real estate. Good things for the economy. So we're hoping the administration is going to encourage that, and we think they will.
And yet the big unknown, which we've been talking about, is commercial real estate. That's going to hit some of these banks, particularly the mid and the small size.
Yeah, the crisis in commercial real estate is the best telegraphed crisis in this whole thing that's going on now. We've been talking about it for 6 months. The issues are clear. Rental rolls are declining. Rates are declining. Many buildings are over-leveraged. All of those things. Why are the REITs going up? In part because certain investors have amassed pools of capital to take advantage of what's coming. The answer on commercial real estate is so far the pressures to sell from the lenders to the owners have not been great enough to create a crisis. It's probably going to happen in the next 6 months to a year.
So when it happens, we can't say we didn't tell you so, right? I mean, it is actually something that is on the radar screens. Yeah. But so far, we seem to be not really acting upon it yet.
Well, I think everyone is acting upon it in the sense of restructuring their rent rolls, trying to restructure their mortgages. The hardest part probably for the smaller and mid-sized banks is land, loans on land, because in this kind of economy, it's very hard to value land.
All right, Don, and we'll be back, and hang on. Don Marron is staying with us here on Bloomberg News. And Don, your view on Goldman Sachs, are you surprised at how quickly it has recovered from this crisis?
Well, I'm surprised at how quickly everybody has recovered from this crisis. But I think what you're seeing here is, first of all, is a reconfiguration of the whole industry. What's happened now is obviously there's a smaller number of big firms. The big firms are now banks, which adds a certain degree of confidence and comfort in the market, and also people are assured that they have access to capital. The big firms and the great firms, among them Goldman has the best selection of talent, probably, than anywhere. What you're seeing now is the talent coming to the fore. Talent, capital, technology, that's the combination that makes success in this business.
So what you're saying is that even whatever Washington does, it's always going to, talent is always going to stay with the A-list firms, though, right?
Well, talent's going to stay with the A-list firms, but the A-list is getting bigger because it will also go to smaller firms, to the best hedge funds, to firms in the private equity business, to smaller securities firms. One of the issues you have going on now is exactly that. How do you make sure that the environment for the talent is also good in the big firms to which the government has given all this money?
Right.
That's why the question of compensation is such a sensitive one.
Yeah.
Basically, you got a few big firms and a growing number of mid-sized firms. Probably very good over the long term.
Okay, Don, in the time that we have, I want to ask about your own business, because you have been looking at the landscape and seeing some attractive opportunities. You haven't gotten through yet, though, First Southern. I mean, that acquisition has not gone through yet. I mean, are you looking at anything else right now?
Yeah, we are. We have actually visited with the managers of over 150 banks. We could probably write a good book on a road show of banking all over the United States. And what's changed in the thing now is bankers are getting, one, more realistic about their need for capital and about the portfolio, and just a little more optimistic about the future for the business. And we think that's good overall. We've announced one deal, First Southern. It got slowed up because the FDIC asked for changes in the rules as far as private equity is concerned. That's been resolved. We can live with the new rules.
So you can move ahead with that, then?
We can move ahead. It's up to the Fed. It's up to the FDIC. We think it's a huge opportunity right now. Okay. Good banks in a good place can both do good business on their own and absorb the banks around them that have the problems.
But of those 150 that you visited with, anybody, any bank that you found attractive?
Yes, a couple.
A couple.
But since they're public, some of them, we can't really talk about it on your show, but we'll let you know as soon as something happens.
Okay, so TBD, to be determined, right? And Don, we'll have you back on when that happens. Thanks so much for joining us and for staying with us through this hour. Don Marron, founder and CEO of Lightyear Capital.